Hi, my name is Anthony Malfera, co-team leader of the Property Boys, and I help buyers and sellers make sense of the market so they can make confident, informed decisions, especially in markets like this. Today, we're going to run through the December 2025 stats, and I think this is actually probably one of the more important reviews because, along the year when you hear month to month, it doesn't always mean what the headlines say it's going to mean. This is going to give you a broad picture of what happened last year. And hopefully from that, we can make a bit more sense of what's going to happen in 2026. So if we look at the big picture across, the GTA, Toronto, York region, the story is pretty consistent. Prices are down year over year. Inventory is up. Homes are taking longer to sell. Condos remain the softest segment of the market. And the market is balanced, leaning towards buyer friendly. I wouldn't say it's distressed though. This is a market driven by, I think, rate sensitivity and more so a lack of confidence, not forced selling from what we can, see. So let's start with Toronto, December 2025. The key stats, average price. If we look at, we can look at these two ways again, year over year or year to date. And year over year, average price was down 4.6% at just under $987,000. The year-to-date average price was $1,077,000, and being December now, that number I think is actually pretty important because now you've accumulated the entire year of average price. So it's probably more representative of what the average price really is versus looking at December versus last December because it just depends on what happened in those 2 months. So sales year over year was up 16% at 1,363 sales in December versus last December. Last December we were at 1,174. So you can see we're up quite a bit. Average days on market was 30 days, which is up 15% from last year. Months of inventory was at 4.74, which again, if you're looking at what that means, anywhere between 4 and 6 is a balanced market, and that's what we're sitting kind of in a balanced, I would say a balanced part of the market. Active listings for December were down 3.6% at 6,000, just under 6,500 active listings. And then if you look at the average condo price, sitting at 663,000, we're down 7.9%. Condo sales were actually up 14.5%, which is good. We've seen quite a bit more activity in the condo space, especially with first-time buyers and downsizers. So this does kind of reflect anecdotally what we're seeing in the market. So what does this mean for Toronto? So Toronto, I think, is seeing some meaningful price compression, I guess, especially in the condo space. Buyers are gaining some negotiation leverage, which again is always good for them because they haven't seen it in for a while, aside from the last 2 years. Sales volume is improving slightly, but still pretty price sensitive. And then Toronto condos are really where the buyers are have most opportunity. But again, quality and location still matters more than ever, I'd say. Now the GTA, we're seeing average price year over year down about 5%. If you look year to date, it's about 4.4, so pretty close. Sales were down just under 9%. Year over year, and again year to date 11.2, so again pretty close when you're looking at the year to date and the year over year comparisons. Average days in the market 30 days, which is up 20%, so obviously things were taking longer to sell this January versus last. And then active listings also up 17.5%. Months of inventory sitting at 4.6. For condos in the GTA, the average price was down 8% at 628,000. The condo sales were up 7.2. So again, we're seeing more condo sales, which is good. For the GTA overall, softer than Toronto in terms of a price on price declines. Carrying more inventory, experiencing slower absorption, probably even more so in the suburban condo market. Detached and freehold homes are holding better than condos, but again, buyers are still cautious along the way. Now let's get a sense of the 905. We'll look at York region and the numbers for December there. Average sale price was down 5% year over year. If we're looking at the year-to-date number, it was down about 6.5%, sitting at 1,225. Looking at sales for the York region, they were up 2.7% year over year, so December versus December. And then year-to-date, they were actually down 11%. Average days on market was 31 days, up almost 20% year over year. Active listings was up 25%. and the months of inventory sits at 4.9, so a little higher than Toronto and the GTA. So what does this mean for York Region? I think sales improved slightly month over month, but the sharp rise in listings continues to give buyers leverage in York Region. The condo market in York Region, average condo price sat at just under 600,000, down 8.4% year over year. Condo sales were 131 in December, and that was down 7.7 year over year. If we look at historical condo pricing in York Region, we take a look at 2024 versus 2023 versus 2022. You can see that condos have seen the largest price correction in York Region, and it reflects the GTA trends, but volume remains relatively low compared to Toronto. All right, let's now switch to the TREB Market Watch. I like this slide because this is showing you the Decembers from 2025 down back to 2020 in all the key areas of the real estate market. So number of sales, active listings, average price, months of inventory. It kind of does tell you a story and shows you a trend of what's happening. If we take a look at the number of sales, you can see that we kind of peaked in 2020. 2021 we were pretty close, and then we kind of dropped in 2022, 2023, up a little bit in 2024, and back in the 3,600 range in 2025. If we look at active listings, you can see 2020 we're actually a little high, probably due to COVID, but in 2021 we're back down at 3,200. And then we bumped back up in 2022 when the interest rates started to rise back over 8,000, and then it continued to climb since then. Interest rates rose, active listings continued to rise. Average price, you can see back in 2020, we were just sitting below $1 million. In 2021, we kind of hit the peak at 1.1, and then we dropped from there. Kind of hovered, if you take a look, between 2021 to 2022 to 2024, we were hovering at that 1,050,000 range. So things kind of, as rates rose, prices kind of plateaued. Now that we're seeing rates actually drop, but we're still seeing softening in pricing, which tells us that it's not really a rate response. Again, I think it's more of a lack of confidence issue, because people just don't know what is happening between our country, our neighbors to the south. People are just uncertain. And I think that's what's affecting a lot of this pricing. If you look at months of inventory, in 2021, we had half a month of inventory, right? Which is, very little. That means, again, if nothing else came on the market in 2021, it would take you 15 days to sell everything that was on the market. You can see from there, as rates rose, months of inventory rose to 2.8, 3, 3.5, and now we're at 4.6. So the story is pretty consistent. The trend is pretty apparent. Months of inventory went up, active listings went up, price was flat and now slightly down. So let's move to the monthly sales data. Now, this is a chart that tracks 5 key levers in the market month by month across all the Toronto Regional Real Estate Board areas. Okay, and it's going to look at number of sales, active listings again, so demand and supply, months of inventory, average price, and days on market, which is kind of pricing power and buyer behavior. And the value here isn't like 1 month of data, it's a trend across the whole year. So when we look at sales volume, you can see that it was seasonal, it wasn't collapsing. What you saw was sales rise from winter into the spring, summer. It peaked between May and July, and then a decline again into the fall and December. This is, again, normal seasonality, not market stress. Even in a slower market, buyers show up in the spring, activity cools in late summer, and December is consistently probably the slowest month. Now, active listings, and I would say here is where we saw like a structural shift. You saw listings climb like steadily from December 2024 at 14,476, peak above 31,000 in the summer, pull back to 17,000 by December of 2025. Now, why does this matter? I would say that sellers came back to the market, supply rebuilt after like years really of shortage, and buyers finally had options again. Months of inventory. And I think here you'll see we went from, still what was considered a seller's market, or at least they had some control, to a more balanced market. In some areas, you even saw a buyer's market. Inventory rose from 3.57 months, peaked to about 5 months mid-year, ended at 4.6 months of inventory. And that means that, again, Anything below 3 months is the seller's market. 4 to 6 is the balanced. 6+ is the buyer's market. I think this year we kind of lived pretty much in the balanced area. Average price, I would summarize this as a plateau, not a drop off. Prices rose into the spring and early summer. They peaked around 1.12, gradual softening into the year end, and we finished at just over $1 million in December. So inside here, prices didn't fall off a cliff. They pretty much flattened, I would say, and corrected modestly throughout the year. And then number 5, days on market. Buyers, you can see here, took their time. We saw faster sales in the spring, kind of in the mid 20 days, longer timelines into the fall and winter, ending at around 41 days. And based on what I saw by the end of the year, and I would say this is kind of anecdotal, but most of the good stuff was gone, and the stuff that was there was sitting longer and just kind of waiting. It tells you, I think, that this year buyers were more deliberate with they had options, they could choose, they could pick what they wanted. There wasn't a ton of urgency or bidding wars. I would say we saw people pricing for bidding wars, but not necessarily for the intention of creating multiple offers. It was a lot of times just to capture attention on a property. So at the end of the day, I would say the home still sold, but they just did it without the panic that we used to see. So to summarize things, I would say that the takeaway here was that these charts and this data confirms that this was kind of a normalization year. Supply returned, demand stayed more present, prices stabilized, negotiation became normal, strategy mattered again. This wasn't like a market that was stuck or frozen. It was kind of one that was measured. If this was helpful, hit subscribe. I try and present clear and data-driven updates on the Toronto GTA market, and really no hype, just context.